I have an idea that I don't think anybody's thought about. Instead of buying a regular single-family stick-built home, I'll buy a manufactured home for half or even a third of the price of a regular home. Live in it for a few years, and then after 4 to 5 years, I'll have 4 times the buying power that I have now, just from what I would save on my monthly payments.
Now that's a good idea.
I mean, look at this home behind me here. It's listed for $118,000, 1,300 square feet. That's less than half of what I would see anywhere in the Treasure Valley. So why not buy one of these?
Yeah, why?
Well, in this video, I talk with Kelly about everything connected to getting financing for manufactured homes. Coming up. Kind of the rules and the regulations relating to manufactured homes in order to get a mortgage.
Yeah, so manufactured homes are a little bit more difficult to get financing on. There's a couple reasons for that. First of all, manufactured homes tend not to appreciate as much as a stick-built home. Now, the manufactured home of today is a much different product than the manufactured home of 10, 15, 20 years ago even, right? So you can walk into a home today sometimes and not even really know that it's a manufactured home. They're so, similar looking to a stick-built home. But they do still carry with them the stigma, if you will, of them being a manufactured home versus a stick-built home.
A mobile home.
And so for that, they have a little bit of a higher risk to the lender and therefore a little bit of a higher cost. So when we were talking about that interest rate environment, what impacts interest rate, that is one thing that will level up the rate on a loan, is if you are buying a manufactured home versus a stick-built home. So you will get hit a little bit for that in the interest rate.
What's kind of like the price difference or the interest rate difference?
It can be anywhere, I would say, from a half to even a point difference, depending upon credit score, loan type, loan to value, how much you're putting down, all of that. Because you can do a manufactured home on an FHA loan, and FHA is only 3.5% down, right? But you're going to get a bigger hit to the rate on that than if you're doing a conventional loan with 20% down in a manufactured home, which you can also do. So it really does just depend, but you're definitely going to see a rate difference on it. The other thing is there's some stipulations with regard to the manufactured home itself. So it has to be its original location, meaning that it can't have been on one piece of property, picked up and moved onto another piece of property, and now we want to finance it. Okay, it has to be the original location where it was placed. It has to have wheels and axles removed and be on a permanent foundation. Okay, so that it's no longer a movable home, if you will. It also has to be post 1976, which we're getting to the point where that's probably pretty much average for everything, because I don't know that anything pre 76 or that old would be even really available anymore. And then it has to be a double wide or bigger. So no single wide. So double wide, triple wide, something like that.
So just to clarify, the property behind me is not on a foundation, meaning it's not real property. So you wouldn't be able to get a regular conventional mortgage on it. So if you wanted to buy this property, you'd have to either pay $118,000 in cash or go to a bank and get a personal loan. And then on top of any payments you would make to the bank, there's also a $405 lot lease fee that you would pay every month to rent the land.
The other thing that's important is conforming lenders don't like to lend on a manufactured home that's been added on to, say, with stick-built. So we run into this occasionally where someone will have a manufactured home that's on a big piece of property and then they added on a porch and not an outbuilding, but like an attached garage or something like that. Then it's half and half. So it's half manufactured, half stick-built. And It's really hard to classify that into a loan. So those are ones that require kind of more some specialized funding that's not a real they don't fall into the realm. So.
Okay, so if somebody's looking for a manufactured home, let's say somebody's just in the market actually for a house, they're not sure. Would they get sort of a pre-approval letter for both a manufactured home and just a stick-built home?
That's exactly what I would do. If I knew that that was a potential that they were looking at manufactured housing, what I would do is give them a scenario based on a manufactured home and a scenario based on a stick-built home. And then they can see the difference straight away. And they can know, okay, is it worth it to me to maybe consider? And sometimes it is. It's not that, we want to say don't do the manufactured home. We just want to know for sure upfront the cost difference and what the criteria is so that you're not looking at something that doesn't fit in the mold of what we can do.
What about investment properties or land? Can you get financing for that? We're talking about that in the next video. If you haven't already done so, hit the subscribe button and the notification bell so you'll know when the video comes out. See ya.